record button. All right. So, hello everyone. My name is Gabby Pringle Owanaka. I am the Assistant Director of the Student Money Management Center, and I'm so excited to see you today for our Meet with an Expert Building Credit Without Using a Credit Card. Woo! To do that. Before we get started, I want to inform you that we have an online we have a set of people who are online, and our director of the Student Money Management Center, Shalise Connors, will oversee those students. And please utilize the chat if you have any questions or concerns. Just to let you know a little bit more about the Student Money Management Center, we serve students at all three campuses, Denton, Dallas, and Houston. We bring you programs such as today throughout the entire academic year. It's an entire series where we have at least 5 per semester. Please follow us on Instagram or follow us on Facebook at TW Maroon Money. And we have Maroon Money Month going on. At the end of the month, we will either host or be a part of up to 30 events. We're at the halfway mark, you guys. Oh, y'all the Q&A. Y'all so nice. It's been great. So tonight our expert is Denise Knight, and I will introduce her in a moment. Just some housekeeping items to pass along. This meeting is being recorded, so for students in the room, please be mindful of the information you are whispering to each other. We will use the chat feature for questions and answers for online people. Online people, please be sure to switch your view to speaker view so you may see the speaker and the slide deck throughout the presentation. This could be found in the upper right corner or maybe on the side of your screen. In the chat for the online people, will you type in what campus you attend? This is very important for all of the students. So please put Denton, Dallas, or a Houston student. At the end of this session, there will be 6 questions, anonymous survey that will pop up when you leave this Zoom meeting. And I ask you to please complete it because your feedback helps us improve these programs for the students. And the in-person people, there will be a QR code at the end of this slide deck, just an FYI. Lastly, we do have financial affirmation coloring sheet, so please take one, and then please eat the food in the back because I'm not taking it home. Moving forward. With that being said, I would like to introduce Denise Knight. And Denise, I do not have your bio on the sheet, so I do apologize. But I do know Denise has up to 20 years of financial education experience through banking services as well as the real estate area. She used to be a loan underwriter, a loan officer, and currently she works at Texas Regional Bank as the community engagement coordinator. Ooh, that's pretty good. It was pretty good. Okay. There, yeah. Thank you. So thank you all for being here, and I will turn the program over to Denise. Thank you.
Okay, like Gabby said, my name is Denise Knight. I am currently the Community Engagement Coordinator at Texas Regional Bank. Prior to that, I was a mortgage loan originator. And then prior to that, I got my introduction in the finance world in real estate as a real estate assistant. So I've been doing this for quite a long time. Please feel free to ask questions. I love for it to be interactive. I don't want you to just stare at me, and I don't want to stare at you. That would be very boring. So if y'all have questions along the way, please feel free to shout it out. Thank you, Gabby. Last time someone was here taking pictures of me for my bank, and she took no pictures of me. None of them. They were all of other people. So, all right. So, we're talking about building credit without having a credit card. Things we're going to talk about is, first of all, having a case for credit. Credit is not scary. Credit is not bad. Credit is good, and there's a reason why you need it. So we'll talk about that. We will talk about alternative ways to build credit outside of having a credit card. and then we'll talk about tips to manage your credit responsibly. Okay. So first, we have 3 types of credit. Are these terms familiar to anybody? Yes, no, maybe? Kind of, sort of? Okay, there's 3 types of credit. Revolving credit, the best example of this is gonna be a credit card. And this is gonna be, you have a credit limit and you're free to use as much of that limit as you'd like. Can't go over that limit. If you carry a balance though, you will pay interest on whatever that balance is. So again, great example of this is a credit card. It's called revolving because there's no set loan amount, there's no set payment. Your payment is going to be determined on what your balance is on your credit card. So that's why it's revolving. It's kind of just changing. The next is going to be an installment loan. The best example of this is like a car loan or a mortgage. So this is going to be, you're going to pay a monthly amount based on the terms that you agreed to, such as the duration of the loan and the interest rate. Meaning, installment loans, or this is called fixed credit, you can use those interchangeably. There's going to be a starting balance. Say your car loan is $10,000. It starts there. And then every month, you're going to make the same monthly payment every month on the same date until that loan is paid off. So it's not revolving, there's nothing changing. You know exactly what your payment is, you know what your balance is, and you're just paying that off until it's paid down. Or I mean, you're paying it down until it's paid off. And then the next type of credit is going to be called open credit. So these are things like your cell phone or your utility bill. There are accounts that have a balance that you're required to pay in full each month. So you don't get to carry a balance on it. Your phone bill is your phone bill. You pay it off every month. Your utility, you pay it off every single month. These are not usually reported to the credit bureau. So these are the kind of things we're going to talk about, ways you can maybe get these reported. But open credit just means that, like, it's not, you know, there's no high balance. You're just required to pay it off every month. Any questions on that? Side note, even though open credit typically is not reported to the credit bureaus, if you don't pay those bills and you get behind, they can report it as a collection. So you don't have to ask for it to be reported as a collection. You do have to ask for it to be reported as a positive. When I say credit bureaus, are y'all familiar with that term? There's 3 main credit bureaus. It's TransUnion, Equifax, and Experian. Those are the 3 credit bureaus. Those are going to give you the 3 credit scores. So when I say credit bureaus, that's who we're talking about when we're talking about reporting to that. Any questions on that? Okay, so credit impact factors. These are things that are going to affect your credit score. They're going to affect your credit report. Basically, your credit report is just a snapshot of how creditworthy, how trustworthy you are, how responsible you are in paying your bills on time. So things that are going to impact that is how long you've had credit. So this is going to be the average of all your accounts, shows how much experience you have with credit. So a longer history should benefit your score. The longer you have accounts open, the longer you keep them in good standing, the higher your credit score goes. Does anybody know like the top range of what a credit score is? Yeah, around 800. I think they say 850. I think technically it's supposed to go anywhere from like 350 to 850. I've said this before when I talk about credit presentations. I've never seen an 850 score. I've looked at literally hundreds of thousands of credit reports. I've never seen 850. I've seen, you know, like 815. I've seen high 800s, but that's usually going to be for like people that are maybe in their 50s. They've had credit forever. They've been just impeccable. Can't say I've ever seen a 350 either. I've seen 400, which is pretty bad. But I've never seen those extremes. So usually a credit score, I would say, you know, definitely shoot for 700. Anywhere above 650 is going to be a pretty good credit score. Okay. Another impact is going to be how much you owe. So the credit bureaus consider the total amount you owe and the percentage of your limit that you're currently using. So for example, say that you have, $1,000 worth of credit limit out there and you are almost maxed out at like 90%. That's not going to look very good. So they want to see somewhere that you're using about 30% of your available credit out there. Basically, high balances can hurt your score because it shows you might be having trouble managing it. If you're just charging a lot and you're not able to pay that off, that's kind of a red flag that you might be in some sort of financial distress. And then lastly, it's going to be your payment history. Your payment history is one of the most, it's probably actually the most important factors that will affect your credit score. So consistent on-time payments are going to be the best way to raise your score. Any questions on that? Okay. All right. Why is credit important? Here we are. Is anybody here afraid of credit? There are some people I know out there that are like credit cards are bad, or not just, but any credit is bad. There are people like Dave. Y'all heard? Raise your hand if you know Dave Ramsey. Heard of Dave Ramsey? Thank you, Gabby. He's a really big financial guru out there that is adamantly opposed to having credit. So I am here to tell you that that is a very extreme viewpoint. And actually not having credit can hurt you financially in the long run. So most people can't pay for anything, that they need in cash. So taking the time to cultivate your credit score and really making sure that you're in a good financial position is going to pay off in the long run. So if you didn't know, your credit affects your ability to rent an apartment. Landlords will run your credit report. Some of them have a credit score threshold, say it could be about 650 or so. The other thing that they're going to look at is to make sure that you pay your bills on time. So not having good credit or not having credit period can hinder you from getting approved to rent an apartment. It can also hinder you from setting up your utilities when you rent said apartment. They're going to look at your credit. They're going to see, again, how responsible are you? How do you pay your bills on time? It's going to affect whether you pay a security deposit to set up those utilities and how much of a security deposit you pay. So if you have really good credit, they might require zero deposit whatsoever. But if you are a little shady, they can charge anywhere, $200, something like that, just to get your utilities turned on. Credit affects your ability to get a job. Most financial institutions for sure will pull your credit whenever you're interviewing for the job. And that's not just for financial institutions. That's a lot of companies will do that again. And it's just they want to see if you're responsible or not. In addition to that, say you get, approved for that job for whatever reason, you may or may not be able to get security clearance if that's required. So if I'm not drilling this into you enough at this point already, your credit report really does show your ability to manage not just your money, but kind of your life in general. If you can't stay on top of that, you're not showing that you can stay on top of other things. Buying a car, this is a really big one that I like to talk about. You can get a car with bad credit. The prime interest rate right now is about 4.5. So that a good, interest rate on a car with somebody that has good credit right now is going to be around, say, 5.5%. You can get a car with a 400 credit score. Guess how much your interest rate is going to be on that? Just throw out a number for me.
13,
Higher.
15,
24, 25, 29, something like that. It's absolutely ridiculous. And it's predatory is what it ends up being. But yeah, so instead of paying somewhere around a 5% interest rate for a car, if you have good credit, you're talking about paying, anywhere between 25, 30% if you have that credit. That really affects your payment. You can be driving a Lexus for $500, or you can be driving a, I don't know, you name it, something not as nice for $500. It's really gonna affect your interest rate is what is gonna determine your payment, so keep that in mind. It's also gonna affect whether you can get insurance or not, and how much you're gonna pay for insurance. You can get insurance if you have bad credit. You could be paying $200 a month, you could be paying $1,000 a month for the same car. Just depends on what your credit looks like. So I'm not saying you can't function without it, but you can see in the long run, having good credit is really going to make it easy for you, and it's gonna make it cheaper for you. Same thing with buying a house. The worse your credit score is, the higher your interest rate is. The higher your interest rate is, the higher your monthly payment is. Make sense? Any questions on that? All right, so we're talking about alternative ways of building credit. There are definitely ways to build credit without having a credit card. The easiest way to do this is to become an authorized user. This is going to be an authorized user on someone else's credit card account. You can't really do this with loans. This is going to be a credit card situation. So I did this for my son when he was in high school. I had a Chase credit card, my name, I'm the card holder, I'm responsible for it. I had him added as an authorized user. We didn't give him the card. He didn't have any access to it, but his name was on my account. And so he benefited from my credit history. He didn't have to do anything to get that benefit. I gave it to him because I let him and have good credit. But you can get a credit card. You can use that credit card and you can treat it just like yours, but you're not the account holder, so you're not responsible for the payment. You can't make any changes on that card. You can't add any other users to it. You simply are able to use it like your own. Keep in mind, whenever you do this, you are tied to the main credit holder for better or worse. So if that person doesn't manage their credit well, that's going to affect you. If they do manage it well, that's going to affect you. This is going to be a family member. I can't tell you specifically, it's up to the individual credit card company, MasterCard, Visa, whoever, who they allow to be an authorized user, but typically it's a family member. They don't necessarily allow non-family members. So if you have a family member, brother, sister, mom, dad, grandparent, whomever that has good credit and is willing to add you as an authorized user, this is a really, really good way to start building credit. Any questions on that? Next way is report your rent and utility payments. Okay, this is a process, y'all. I'm not gonna lie. It can be worth it, but it's gonna take some work on your part to do this. So like we said before, rent utility payments are not typically reported to the credit bureau, so they don't impact your credit score. So if you think about it, does anybody rent an apartment right now? It's probably, is it the biggest bill you pay every month? Kind of, sort of, for you, yeah. So the point here is that like what you're paying regularly every month, the biggest bill that you're paying every month, it's not even reported on your credit report. And so there are ways that you can have that added to your credit report. There are lots and lots of services that will do that's why I'm not going to go over all of them, but feel free to Google how to report rent payments to credit bureaus. The good information will come up there. Bankrate is a really good place. They list out probably a lot of there's like 15 different companies, services, if you will, that you can register them with. There's apps out there that can do it. Yes, Gabby.
I know when I had my old apartment, I went to the front office and they were like, oh, we can just report it for you.
Yes.
So some can be that simple.
Yes, they can. Some, was it like a bigger complex company or was it more of an individual? You don't know.
Oh, I know it was a company.
A company,
Yes.
yeah, okay. So So some of the bigger companies will definitely do that. It doesn't hurt to ask, no matter where you're living, it doesn't hurt to ask if your landlord will report it to the credit bureau for you. Just keep in mind, whenever you are going through looking for a service to have this done, you want to find out what payments, that they'll report. If they'll report your rent, your utilities, your cell phone bill, if you have internet, things like that. So just make sure that you're finding out what exactly it is that they will report. Find out too, a lot of these services, they link to your bank account. So you're gonna have to give them access to your bank account. They're gonna be able, that's how they get the information, is they see what payments come out of your bank account so that they then report them to the credit bureaus. So just be aware that that is something that you might have to do to be able to have, these things reported on your credit report. The other thing that you want to ask is if they report, oh, okay. Oh, wait. Okay, welcome. So we are, to catch up everybody that just came in, we're talking about alternative ways to build credit. Just to catch you up, I'm gonna slide back because we just literally have so many people coming. One of the ways that you can build credit is to become an authorized user on somebody's credit card. This is gonna be somebody like a family member, so parent, grandparent, brother, sister, somebody like that. You can ask them if you can become an authorized user on their card. You have no ability to make any adjustments on that card, so you cannot add anyone else yourself. You cannot increase the credit limit. You can't do anything. If they decide to give you a card, which they don't have to, you can use that card, but that's all that you can do on it. But basically you benefit from being an authorized user on somebody's account that is already established. And then we started talking about ways to report your rent and your utility payments. So again, there's a slew of services out there that will do this. You just have to look for them. It doesn't hurt to ask your landlord if they'll do it. They may or may not. They're not required to. They don't have to do it. But again, it does not hurt to ask. But whenever you're selecting a service that you want this, again, ask what payments will be reported. You can do rent, utility, some of them will do cell phone, some of them will do internet. So just ask what all payments that they will report. I was saying as y'all came in, a lot of these you do have to give them access to your bank account. Because that's what they do. They go in, they look at your bank account, they see what companies you're paying, and that's how they know how to report to the credit bureaus. So be aware you might have to give them access to your account. You want to make sure that they're reporting to all 3 credit bureaus. So Equifax, TransUnion, and Experian. Those are the 3 credit bureaus. You really want to make sure if you're taking time to go through all the steps and the trouble of getting these alternative credit or accounts reported, that they're reporting to all 3 of the bureaus. There's like, y'all heard of Experian, Boost, I think Credit Karma partners with TransUnion. Just make sure that you're not reporting to just one bureau because that will help, but it really won't be as effective as what you want it to be. Make sure you find out if there's any setup or monthly fees. Some of the services are free, some of them do require a setup fee and a monthly fee, and that really just depends on the extent of what they're reporting. So make sure that you know what you're signing up for. And then you need to find out if there's any landlord consent or action on the part of the landlord. Some companies require the landlord to be involved, some of them don't. So find out from that, if you've already asked your landlord if they'll report it and they said no, you might not want to go with the services. They're going to require the landlord to take action because they're not necessarily inclined to do that. So again, just remember, they're not required to report it to the credit And then you also too, you want to ask how long will it take the payments to appear on your credit report? Does it appear that next month? Does it take 60 days? Does it take 90 days? How long is this process going to take? Again, you can just do a simple Google search on reporting rent payments to credit bureaus and you'll come up with a lot of information. It'll also give you information not just on the rent, but reporting other things as well. Any questions? Yeah.
So for my apartment, I got roommates, like, we pay like under one lease. But like my friend is like the main, like, there's like
Yeah.
a name on it, so like,
Yeah.
how
So-
do we do it?
Probably the best way that for you to do would actually be for one of those services that has access to your bank account, because then they can see exactly what it is you're paying. And the only reason, it's not a bad thing, I mean, there's so many privacy laws and things that they can and cannot do with your information. So when you give a company or a service access to that bank account, they're only authorized to do one thing and one thing only, and that's report it to the credit bureau. So that'd be probably your best bet.
Yeah.
Any other questions? Either that or, your landlord could do it too, if they're willing to do it as well. Okay, another way to build alternative credit. So again, we're talking about building credit without getting a credit card for y'all that just came in. If you are scared of credit, I started out by saying it's not a bad thing. You really do have to have a credit history to be able to exist financially in the world. And I know that that sounds a little bit extreme, but it kind of just is the way that it is. We were talking about before how having good or bad or no credit can affect things that you don't even think about, like your ability to get a job. Your ability to get security clearance for that job. It's not something that you would think about when you think about credit. Oh, it's gonna keep me from getting a job or not, but it can. Because what your credit report is, it's just a snapshot of how responsible you are at managing your life. And I say life, I don't say money. It's how responsible you are at managing your life, because that is a huge part of your day-to-day activity. So if you can't manage your bills and paying your bills very well, you're probably not managing other things well either. So if I'm an employer and I see that you're a disaster on that end, I'm going to be less likely to hire you, because it's real risky for me to hire somebody that looks like a disaster. So just keep that in mind. And the other thing that we were talking about, why credit is really necessary, is because in the long run, having bad credit or no credit can really cost you more money. We talked about you can get a car if you have bad credit, but you're talking about the difference between, say, like a 5% interest rate on that car and a 25% interest rate. That's a huge difference in your payment. So they're not necessarily going to tell you no, but you're going to end up paying a lot more for that car, for that house, for that insurance, for whatever it is. They're going to end up paying a lot more than you really should have just by having bad credit. So, any questions on why we need credit? Okay. The third way that we're going to talk about is getting a credit builder loan. So these are, remember, this is still a loan. So these are going to be for people who may have difficulty getting approved for a traditional loan. So these are going to be people that have either bad credit or no credit. This works like a reverse traditional loan, because its only purpose is to help you build credit. That's it. You're not going to receive the loan proceeds until you've paid that loan off. So on a traditional loan, you go to the bank, you say, I need a loan, personal loan for $2,000. They pull your credit, they make sure that you're good for it. They say, okay, we're going to lend you $2,000 at a 6% interest rate. Your payment is $200 every month for the next 24 months, whatever it is. That's a traditional loan. The credit builder loan is going to be the exact reverse of that. So you're going to go to the bank. These are typically going to be credit unions are going to be a good place to find these, or like your local community banks. The big banks, your Wells Fargo, your Bank of America, not really so much, but there's plenty of community banks out there that will do this, or credit unions. So you're going to go there and you're going to inquire about a credit builder loan. They're going to be, yeah, we can do that. So what happens is you say, I want a loan for $2,000. The lender's gonna put that $2,000 into a secured account. And it's gonna sit there. And then you're gonna make a monthly payment on that. You're gonna have an interest rate, you're gonna have a fixed payment, but again, it could be your 6% interest rate, it could be your $200. You're gonna pay on that loan every month. That lender is going to report those payments to the credit bureau, so this is how it helps you build credit. And then you're gonna get those proceeds at the end of that loan term instead of in the beginning. The reason why this is called a credit builder loan is because that's exactly what it does. And you are paying into your loan, if that makes sense. It's a secure way for a lender, for a bank, a credit institution to let you borrow money with very low risk because they're not giving it to you until after you've already paid for it. So it's kind of a win-win for both of you. Any questions on that? And then the next way is, yes.
My question is, what happens if you weren't able to pay the loan?
If you weren't able to pay on the secure loan? Well, it depends. So like every institution is gonna be a little bit different. So you might be able to get some of that back because you've paid into it and they're not paying anything out on it. You might not be able to. So you're just gonna need to be able to just read the terms and see what happens on that. But we're talking about building credit, and so by not being able to, if you do that and you're not able to pay it, you're basically doing the absolute reverse of what we're talking about. Now, instead of building your credit, that's gonna hurt your credit because they're gonna report that you haven't paid on it. 9 times out of 10, I don't want to speak emphatically on this because it's going to be up to each individual institution, but 9 times out of 10, I would say you're probably not going to be able to get that money back because it is still a loan. So what that's going to look like is you've defaulted on that loan, even though you haven't gotten any money. You've still went into a contract on paying on that. But yeah, but it's going to depend. So read that.
Alright, what is the lowest that you can get? Like, what is the lowest amount of money you can borrow?
On a credit bill or on a credit? That is a good question that I do not know the answer to. I'm not sure. Any other questions? Also too, side note on that, thank you for asking about the lowest amount too. Remember that that's still a loan. So you want to treat it exactly like a loan, even though you're not getting the proceeds until the end. Don't overextend yourself on that. If you can afford $100 a month payment or $200 a month payment or whatever that is, that's the amount that you need to borrow. Don't be going in there borrowing more than you need, having a payment that you can't afford. We're still talking about managing credit, so it's still a loan. You still want to treat it just like, a regular loan that they are reporting to the credit bureau.
So let's say I can afford like having, let's say $1,000. Would it be the same thing if I like did the $500? The interest will increase more the more I get.
So the interest rate probably wouldn't change on that. I wouldn't think so. It's just your payment that's going to be more or less depending on how much money you borrow.
From Google, I have a question.
Okay, good. Thank you, Gabby.
No. The lowest I see is $300, and I also see someone said $500 for their lowest.
Okay, on the credit builder
Yeah.
loans, yeah. That's really gonna be, and keep in mind, doing a $300 loan is really not beneficial to a lending institution. I mean, making 5% on $300 is really not, so y'all know that how, anybody that you borrow money from, the way that they make money is on that interest. And so taking the time, whether you do a $500 loan or a $50,000 loan. Now, when we get up into the higher loan amounts, that's a different story. But whether you do 500 or say 50,000, it's still the same amount of paperwork. It's still the same process for that lending institution. They're still paying that loan officer or that admin to do all that paperwork and all the setup and everything. So it really becomes disadvantageous for a lender to loan on a lower amount of money. So just keep that in mind. If you go to the credit union and you say, can I get a credit builder loan for $300? They might be like, nah, that's not gonna be worth our time, no. So just kind of keep that in mind. But like Gabby said, I guess there are places that will do it. Any other questions on? Yes.
I'm not sure if you've gone over this just yet, but I've been told that you can use your student loan and you can gain credit from that. How does that process work?
Absolutely. So I didn't talk about that one in here. I'm glad you brought that up though. Student loans are a great way to build credit. As soon as you sign your name and accept that loan, that student loan, because that's exactly what it is, it's a loan, it's reported to the credit bureau. Then obviously you have your grace period while you're in school that you don't have to pay off. So it's kind of just sitting out there like, just kind of holding. Student loans are a great way to build credit though, because it doesn't take a whole lot to get approved for them. You fill out the FAFSA, you go through that process, there's no credit check, there's no how much is your monthly income, there's none of that. So it's a really easy loan to get approved for. And then once you start paying it back, that's when it starts building your credit history. So it doesn't really start until you start making payments on that, but it's a really easy way to get approved for the loan and get that loan in the first place. You do you on this. I'm gonna throw it out there because it is such an easy way to start building credit. It could be advantageous for you, even if you can afford to pay for your school for the next, year. If you want to go ahead and take out those student loans, it is such an easy way to build credit. But some people don't want to go into debt if they don't have to, and so that's why we're talking about alternative ways to do that. The repayment terms on those student loans are also usually very reasonable too, depending on if they're subsidized or unsubsidized, if it's private. Now, I wouldn't necessarily recommend going the private route if you can go through the government first. Use those federal loans first. If you need to go private, it's certainly not a bad thing. I would just go with the government options first. Those private student loans, and I'm sure you'll have other presentations on this, but those private student loans, the interest rates are going to be higher on them. And there's some limitations as far as refinancing them, consolidating them, things like that, whenever you get into the future on repaying them. So the government ones, those are gonna have a lower interest rate and they're gonna have better repayment terms in the long run. But again, student loans are a very good way to start building credit. Yes.
Going along with that, do you get to decide the amount that you pay back, or is that something that you work with the federal, the person who's assigned to you?
Yeah, you don't get to decide that. So what they do is they look at how much you owe. Typically, student loans are 10-year repayment plans. However, they're so willing to work with you. You can say, if you get out of school and you're having a hard time finding a job, you can apply for deferment if you don't have enough, money coming in to pay monthly. Again, if you don't have enough money, let me go back. They're going to tell you what your payment is. And you're going to want to pay what that payment is because it's going to pay it off the fastest. But if you can't do that, they will work on either just deferring them altogether. They'll do kind of like a reverse option too, where you start paying out lower and then gradually your payment increases incrementally as you start earning more money. So there really are some good repayment options on that. Yeah, but no, to answer your initial question, no, you don't get to decide what that is, but they will work. They will give you options. Yes.
Are there any credit benefits to being more aggressive with those payments? So let's say you normally would pay $300, but you want to pay it off sooner and go for like $450, whatever it may be.
Yeah, absolutely. So it's not necessarily going to benefit you like as far as your credit score goes. As long as you're making that monthly payment, at least the monthly payment on time, whatever that is, that's what's gonna benefit your score. What's gonna benefit you on that is that you pay less in interest over the long run. The quicker you get it paid off, the less interest you pay. Yeah, so you're paying less for that credit essentially. Yeah. Any other questions? Okay, secured credit card, here we are. Okay, so this is still gonna be a credit card, and this is a really great way for students to get a credit card. Again, credit cards are not evil, they're not bad. You just need to be able to manage them well, and you can do this. I have faith in you, you can do it. So a secured credit card, it's gonna be a type of credit card that is backed by a cash deposit that acts as collateral. Collateral simply means I am pledging this that you can have if I don't hold up my end of the bargain in this agreement. So most of the time, you're gonna make a deposit, and these are well-known credit cards. This is Visa, MasterCard. These are like, Discover. These are cards that are well-known, and you are gonna go for a secured credit card. So you're gonna put a deposit. So you put a $500 deposit on this credit card. Typically, this acts as what your credit limit is. So you give $500 to said credit card company, they give you a credit card and you have a spending limit of $500 on it. This is your card to make purchases at stores, in line. It's just like a regular credit card. The same rules apply. You're gonna make a monthly payment on it. You're gonna wanna keep that credit utilization at about 30%. So don't max out that $500, even though that's your limit. Keep your utilization within about 30%. They're gonna be reporting your payments to the credit bureau. This is a great way to build credit. The reason that it is secured is because you gave them money up front to secure that. So if you don't make your payment every month, they're gonna take money out of that $500 out of that security deposit that you gave them. They're also going to report that negatively on your credit report. Just because they have that money that you deposited and they're able to pay it, you didn't pay it. They paid it for you. So make sure you treat that as a regular credit card. Make sure that you make at least your minimum payment every month on time. I cannot emphasize that enough. Whether it's a loan, whether it's a credit card, whatever it is, make at least the minimum payment, on time every month, and you will see your credit score go up. The best way to do it. Again, keep your credit utilization below 30, and then do not overspend. Don't get yourself into a spot where you cannot make that monthly payment, because we're talking about trying to build credit, not destroy it. There's lots of places out here that'll do this. I think Chime, I'm sure y'all have heard of them, but again, if you just Google student credit card, Google secured credit card, things will come up. The only thing I want to say on this one is that don't get something that you have to pay an annual fee. It's not necessary. Never pay an annual fee on a credit card. Unless for some reason you just really want those airline miles or whatever it is, the benefit is that they're giving you. There's plenty of really good credit cards that have whatever type of rewards out there that don't require an annual fee. Same thing with secured cards. Any questions?
Yes, Denise, we have one question.
Okay.
Is it bad if you continuously check your credit score?
No. I'm assuming that we're talking about something like Credit Karma or some sort of app like that. No, it's not bad to check it. In fact, it's a good thing.
Thank you.
Yes. Okay. So now let's talk about ways of getting credit. We're going to talk about managing it. And we are almost finished here. The first thing is to be realistic with your expectations on this. Building credit is not an overnight process. It's not. Those credit scores that I see that if you're in the 800s, they didn't happen within a year or two. They happened over, decade, 2 decades. So be patient with it. It requires time, it requires discipline, and it requires responsible financial habits. There's no other way to get around that. I mean, you're gonna have to be responsible with your credit. Otherwise, it's not gonna go well for you. You're gonna have to be able to manage it, and you can do it. So understand that credit is a tool. It allows you to borrow money with a promise to repay. Nobody I know has enough money sitting around to buy, not only things that you want, the things that you need, you know. You're gonna need a car to get around. You're gonna need a house to live in. You're gonna need things. Nobody I know has money just sitting around to do that. So this is a tool that helps you reach your limits. It demonstrates your ability to manage money, and like I said, not just manage money, but manage your life as well. Remember that it's not just about money. We're talking about getting a job, you know, getting insurance, getting those things. And it proves that you're trustworthy. It really is a reflection on you. Like, that's your credit report. I mean, doesn't even make, it's such a obvious statement, like take it personally. It is yours personally. This is your reputation. This is what you're saying to you about yourself. To anybody that pulls your credit, this is what you're saying about yourself. So just think about that. Be realistic with it. The next way is to understand the fees and terms. This is really important too. So we're getting close to the end, so I'm just gonna go through this real quick. Annual percentage rate is APR. This is the interest rate that you pay on borrowing money. Nobody lends you money for free. It wouldn't even make sense to them. So you're always going to pay an APR. You're always going to pay an interest rate on that balance that you don't pay off monthly. Now, if you have a credit card and you pay that balance off money, are you going to pay interest on it? What are you going to pay interest on? If you pay it off, there's zero balance. So you would be paying interest on zero. 20% interest on zero is still zero. So if you pay that card off monthly, you will not pay an interest charge on that. There is such thing as called a penalty APR. Y'all don't mess around with this. This is no joke. You can get a credit card, a good rate on a credit card right now is still stupidly high. It's probably, I don't know, 50. Yeah, 15%, because interest rates are really high right now. If you are late, even 1 day late, the credit card company has the right, or loan, whoever you owe money to, not just credit card company, whomever you owe money to, we're talking about credit card companies. Even if you're 1 day late, they are legally able to report that to the credit bureaus. And then they can also increase your interest rate. You could go from a 15, 17% interest rate to a 32, 39% interest rate. So take that very seriously. I cannot emphasize how much the importance of paying at least the minimum payment on time is every month. If all you can afford is the minimum payment, just pay that. But at least just pay that, because you're going to be charged a late fee, and then your interest rate could go up. And that interest rate doesn't just temporarily go up. Now that's your interest rate then. So keep that in mind. And then, like I said, there's a grace period, and that's the time between the end of the card's billing cycle and when the next payment due date is. And so if you pay that off, you're not going to pay interest on that. So understand the fees, understand the terms. Next one is make on-time payment. I'm not sure that I've said this quite enough, but payment history accounts for 35% of your score. That is by far the largest percentage of anything. Payment history goes into it, your utilization that we've talked about, your debt to income ratio. There's other things that go into it, inquiries, how long you've had credit, but by far the largest percentage is your payment history. So take that very seriously. Ways to manage this. I set up, this was the greatest bit of information anyone ever gave me years and years ago. Set up automatic payments to cover at least the minimum amount. That way you don't have to think about it. If you get really busy 1 month, or just that, if you have that automatically minimum payment automatically taken out of your bank account, you're not ever going to have a late payment. Why would you not do that? Seriously, why would you not do that? So set up at least to have the minimum come out. Now, If you can pay more, you should pay more, and you can do that. You can pay in 2 separate transactions. You can have the minimum come out and then you can pay more. But at least have that auto draft for the very minimum. And then we already talked about this. Don't make late payments. You're gonna go to late fee, you're gonna pay higher interest rate, you're gonna lower your credit score, and that late payment is gonna stay on your credit report for 7 years. That's a long time. It's a long time for that negative history to fall off of there. So just make sure that you're making on-time payments at least the minimum. And then lastly, for managing credit, pay more than the minimum. Paying your balance in full every month is ideal. We don't live in an ideal world, so I recognize you're not always going to be able to do that. But if you can pay at least a little bit more than the minimum, make sure that you do that. But paying it off every month, you're going to avoid interest charges, and it's also going to avoid you for getting your debt out of control. Y'all, it's so easy to just use that credit card and pay the minimum, and then before you know it, you've reached your max. And that's gonna lower your credit score. It's gonna stress you out because you're in debt. You owe more monthly than you want, and it just kind of gets into a spiral. So pay as much as you can. Pay more than the minimum. That would be the best advice I have for you. And then keep that total credit utilization low. And again, this is the percentage of your total available credit compared to what you're using. Keep it below 30%, and it's just a good way to live within your means. It really is. So, in conclusion, credit is a good and necessary thing, but you just need to responsibly manage it. And there are definitely ways that you can do that. The best way is to set up those auto payments and to not spend more on your credit card than, 30% is ideal. Don't go over that. Any questions?
We do have a question online.
Okay.
To help build credit, can you also submit your report of the tuition payments that you make? So, and this is not student loan payments. So sometimes students are on an installment plan to pay off their student account balance. Can a report of those payments be submitted?
That is a really good question that I've never been asked before, and I've never heard of that being an option. All of these services, they are really just talking about rent, utility payments, cell phones, internet, things like that. It might not be a bad question to ask one of those services, but to my knowledge, I am not aware of that being a possibility. Very good question, though.
Thank you. We do have another one.
Okay.
The question is, so I know that credit cards have different benefits. Are there any cards you would recommend to start with? And I know this is a question we get in the Student Money Management Center, and we will look at like a website like NerdWallet or Bankrate, because everybody has different needs for a credit card, and they will tell you maybe there's certain fees that might be attached. Do you have any other advice about having them look for a credit card?
So I absolutely second that. NerdWallet and Bankrate, those are really good sites to do it. I think, and Shalise, you kind of alluded, I think it's really a personal preference. I really am a fan of the cards that pay you cash back, because you can apply that cash back. It's applied directly to your balance, to your outstanding balance on your card. So that's a really good option for me. It's basically getting free money to pay, a certain amount on my card. That's one that I would definitely look for. The ones that offer rewards and things like that, I mean, this is just my personal opinion. I mean, I can go buy a watch somewhere else and I don't have to use a credit card to earn rewards to get that. If you look at some of the rewards, I mean, there are things. One of the benefits I do think me personally have benefited from is to have a credit card that's tied to the airline company. if you like to travel, if you use those airline miles, that is a really good way to do it. Just keep in mind, again, whenever you're doing this, any of these rewards, any of this cash back, any of the miles that if you are paying more in interest than you would be paying on any of these rewards, it's a losing factor for you, and that's what the credit card companies are trying to do. They're wanting to say, oh, we'll give you cash back, we'll give you airline mile rewards, but if you end up paying twice as much for that airline ticket in interest, it really doesn't help you and it helps the credit card company. So that's a long answer to, I really think it just depends on what is meaningful to you. And in my personal opinion, the ones that pay cash back are the best ones.
Thank you.
All right, well, if there's nothing else, thank you guys for being here. I hope it was helpful.
Like I said earlier today, one, thank you, Denise, for being here. It was a great presentation. I learned so much more, and now I'm able to help everyone in the future. Like I said earlier, there will be a 6 short question survey for you guys to complete. So Zoom people, once you get out, it will be there. And then I'm gonna go to the next. Oh, yes, slide. Where you get it? And people can scan this QR code and give us feedback while you're doing that. The Student Money Management Center is hosting Maroon Money Month. We have up to 30 events. We're at the halfway mark. We got 15 left. I'm actually about to go to another event in the Fit and Rec. It starts at 5:30. We will have financial game night. We're playing Jeopardy. So if you want to come win a prize, please do so. Tomorrow we have a tabling session called The Price is Right. Please attend that. On Monday, we have Financial Jeopardy in PV if you want to attend that. And we have more events, so please look on Pioneer Engage as well as TW Calendar Events. And of course, follow us on social media on Instagram at TW Maroon Money. And that is all I have. We will greatly appreciate that feedback. And please, we have extra, so take a to-go box. Oh, also, if you have a punch card with us for this month, please come and get a punch. Shay will provide you with your punch. Thank you, everyone.